All right. Today we have the special guest, Mitch Underwood, talking about health insurance. Mitch, welcome. Glad to have you here.
What's up, Derek, man? Thanks for having me. Appreciate it.
Absolutely. So Mitch is with the Health Advocate, a health insurance consulting service. He typically works with individuals, small business owners that are looking to get health insurance for themselves, and he's licensed in over 30 states. I don't know how you keep all that together, but good for you. And today I want to talk about a couple of things because, health insurance for a lot of people is a really big deal. Some people, skirt it until it's, oh crap, something happened. And how does my insurance work? And some people are really good about being proactive.
Right.
What's kind of one misconception you think there is about health insurance and that market, basically?
Well, Derek, I would say probably the biggest, misconception that I see with people, typically, especially someone coming from a job, like maybe you've worked in corporate America, things like that, is I think a lot of times people leave those jobs or whether they're laid off, whatever the case may be, they're separating from that company. And I think they're usually under the impression that it's going to be the same or more about the same, whether that's what they're paying each month or the quality of coverage that they're going to receive. I think it ends up being a big shock to the system a lot of times, just how different it is when you're getting health insurance for yourself as an individual. So I think that's probably the biggest thing I see is that there's kind of a big shock that they encounter because they're like, oh, I just thought it'd be, kind of like I had before. I want a low deductible. I want a PPO. I don't want to pay more than this. And then they might just get hit hard on all of those things. It might not be anything like the plan, like the employer sponsored plan that they had before. So that's probably to me just the big thing that jumps out is a lot of people kind of encounter kind of like I said, sort of a shock, to what's out there. So
Oh yeah, I've seen that all the time. Whenever I have a client that is in between jobs and they're
yeah,
evaluating Cobra, I had no idea Cobra cost this much.
yeah,
I can't
yeah,
afford this. So, what do I do? And then I'm like, well, you got to go get an individual plan. Let's
yeah,
shop around, see if it's different.
right.
But then, to your point, I'm sure there's so many pieces of the health insurance policy that people aren't aware how they work. That's probably very eye-opening to them as you're walking through the process, like what to look out for, like the deductible versus the copay versus the
Right.
co-insurance, right? I don't know if you want to spend
Right.
maybe a minute just to kind of explain what those kind of things are. That'd be helpful.
Yeah, no, absolutely. Yeah, I can definitely kind of describe just in basic terms sort of what those things mean. Because again, yeah, a lot of times they've never necessarily even really looked at their health insurance. They don't really know how it works. So, really when you're looking at things like a deductible, a deductible is going to be the amount of money that you're going to pay before the insurance company starts to help. So if you got, say, a $5,000 deductible, what that means is you get into an accident, well, you're going to pay towards that deductible before the insurance company starts to help. So bare minimum, you're going to owe 5 grand. Now, co-insurance, like if a lot of people are used to through their company, a lot of times that can be like 80-20, 70-30, even 60-40. And what those kind of, what those designate basically is, let's say it's 80-20. 80-20 means is that after you hit your deductible, so let's say you have that $5,000 deductible, you pay that 5 grand. Now the insurance company starts to help pick up some of those medical expenses. They're going to be paying 80 cents on every dollar. You're going to be paying 20 cents on every dollar until you hit an additional max out of pocket, which a lot of times is usually 2 grand if it's 80-20, something like that.
Mhm.
So what that means is that, like I said, you're basically cost sharing with that plan at that point until you pay an additional fixed amount. So in the type of scenario I'm describing, if you have a $5,000 deductible with a $2,000 max out of pocket, you're adding those two numbers together, which means that all said and done, your total max out of pocket would be 7 grand on any given type of medical situation, whether it was a surgery, et cetera. So you're only going to pay $7,000 at the end of the day. After that, insurance is going to pick up 100%.
Right.
So that's kind of how those terms work, and definitely something you want to take a look at and keep in mind when you're shopping options. Because I mean, even if you find something affordable, you want to see though what is that max out of pocket? What's the most amount of money I'm actually on the hook for before this plan really does anything for me? Because
Yeah.
I see that a lot too. Sometimes people do find an affordable plan and then they don't realize it's like a $17,000 family out of pocket.
Yeah. It's
And
like,
it's
what am I
like
paying for?
yeah, yeah,
Yeah. So I'm sure
and
people have that.
yeah, absolutely.
Yeah, because I think that's important to look at the total cost of it, right? You have to
Right.
factor in, okay, well, if I am hurt, what does happen? If I am sick, how does this look? And my
Exactly.
premiums are
How does
X,
it work?
but you want to factor everything in. And one of the things that I've been seeing lately, as a financial planner is a couple things really. So I have a swath of folks that want to retire early. I mean, a lot of people
Right.
that are still in that fire movement, right?
Sure.
But to me, the biggest thing that we've got to account for is the health insurance piece of it, because that is a big cost. And if you're
Yeah.
employed, they're covering, usually 30 to 50, maybe even 75% of the cost of the premiums, at least for you.
Right.
And some are even giving money towards an HSA or
Yep.
health
Sure.
reimbursement account, for example.
Sure.
So now that cost is going to shift onto you. So how do you help advise people that are, 62, so not the ideal
Sure.
age to be buying insurance on your own,
Sure.
to kind of get a plan that's affordable that can bridge them till Medicare?
Yeah, I think with regards to that, it does depend on everyone's individual situation as far as kind of what their needs are and how they want the plan structured. Now, I will say that, from a cost efficiency standpoint, and this is kind of where I think someone like yourself kind of comes into play, obviously dealing with someone's, retirement planning, the various accounts that they have is, for instance, if you go through the market, what's called the marketplace, basically your healthcare.gov plans, your rates are primarily based on your total household income for the year. So let's say you're retired, you don't have, maybe you don't have a quote unquote income, but of course, if you're drawing from certain accounts that are going to be, qualified as taxable income, that's what they're going to go off of.
Mhm.
So depending on how you navigate that, it can be cost efficient, So if you know a set amount that you want to withdraw, that's going to maybe qualify you for a tax subsidy, then maybe that does give you actually a pretty affordable health plan. So you do want to kind of, I would say, work with like a financial advisor if you're trying to kind of go about it in that sort of way. Now there are some private options available that have nothing to do with how much money you make. It's kind of more of a fixed rate based on your age. And various other factors, if you don't want to go that route. So, I mean, some states do have the ability to do that if you don't want to go through. Some people are very anti-government and they really do not want to go through healthcare.gov. Like they're very, very adamant about not wanting to do that, even if it maybe is the best thing for them. So, by all means, path of least resistance in some respects. If you can make it work another way, and they prefer that, then absolutely. But yeah, that's one situation where I would say that they would want to consult someone like yourself to kind of make sure they're figuring this out right and that they're not, got their numbers mixed up, so to speak. So
Gotcha. Yeah. So definitely try and run that before you probably quit your job too, I imagine. Now, when
yeah.
they look at your income, I assume they're going to ask for your tax returns, correct? So what do you tell clients that, hey, I just quit my job and my last year's tax return was based on my income, but I'm not making that now?
Yeah, so that is where it can be difficult, where again you want to get a handle of things, is that if you're going to have a dramatic shift in what your taxable income is for the year, you're just going to have to figure that out, because you don't want to just ballpark and throw up a number or throw up the number that you made last year. Because the biggest thing I tell people, if you're going to go through like the marketplace, because like I said, they're going to match it to your tax return at the end of the day. They're going to know what your actual taxable income for the year was. So the biggest concern that I have for people in that situation is I would never underestimate. So like if you throw out a number, let's say you run your quotes and you say, well, I think I'm going to make 60 grand this year. Right. But then you end up by year's end, for whatever reason or another, maybe it's 90, maybe it's 85. At that point, they're actually going to hit you with taxes at the end of the year, because you made more money than you told them you were going to make. Your rates were based on that income figure you gave them. So now they're actually going to take that subsidy back in the form of taxes, basically. You're going to owe back on that. So I tell people, even if it's not exact, it's better to estimate higher than lower, because if you made less money than you told them you're going to make, it's not a big deal. Actually, you'll get a tax credit the following year on that, because you actually paid more for your health plan than you should have paid. But with that being said, like that's kind of the main thing you want to make sure you have pinned down, is you really don't want to screw that up. Because I mean, I've run into self-employed individuals that said, yeah, I owed $20,000 this year in back taxes
Wow.
yeah, seriously, I don't know how
Yeah.
you do it that bad, but I mean, I think some people sometimes have the mindset they're going to go in there and they're just going to put what they want in there.
Oh, they're
Like
going to get away with it, right?
how are they going to know? How are they going to know? I'll
Yeah.
just get this for free or whatever. And they take this whole big subsidy, and they don't realize that they're going to get you on that at the end of the year. They're going to know what you really made, and they're going to ask for that money back essentially. So
Yeah. I mean, no one knows this. I don't know why people don't know this, but the government gets the same copies of everything you get. They already have
yep,
it.
yep,
You just need to
yep,
verify it. So we're not
exactly.
going to pull the wool over the sheep's eyes here. that,
No,
that kind of thing. That's good.
exactly.
Well, I guess speaking of business owners, because I've got a decent amount of business owner clients as well.
Sure.
So how do you typically go about helping a business owner? Does it make sense to write the insurance through the business, to do it personally? Is there a better option typically, or it really kind of depends on the individual care?
It definitely does, I would say, depend on the individual. Now, obviously, typically if you're self-employed, your health insurance is going to be a write-off for you. So that's not really a problem. I've had people, if you want to use your personal account, use your business account. Usually it doesn't really matter in that regard. But yeah, I mean, I think it just kind of depends on how they want to go about it. Because especially with like a small business, sometimes they may not have that many employees, and it may not make sense for them to maybe set up a group policy, because group policies are naturally a lot more expensive than an individual health insurance policy for most people anyway. So I do run into some business owners, maybe under 10 employees in certain states, where it might make sense to just kind of go by the individual and just try to price it out that way versus, like I said, setting up like a group plan. And it just depends too at the end of the day. Do they want to offer benefits? Do they want this to be through the company, or do they just want it to be themselves private, and then the rest of the employees can kind of figure it out on their own, because obviously they don't have to offer it unless they have like more than 50 employees anyway. So that's just totally up to them. Some business owners I encounter would rather just kind of give them, basically give them some extra money to help pay for their health insurance. Maybe they don't want to necessarily have anything set up,
Mhm.
but they say, hey, I'm going to give you $200 a month. If you want to put that towards your health insurance, you can do that. And you can kind of figure that out on your own. So there's a lot of ways you can kind of go about doing that.
Yeah, and I think you definitely, this is one thing where probably you're licensed in 30 states. You probably understand the
Sure.
difference, nuances between each state.
Right.
So I think
Right.
definitely know your rules and regulations if you're going to offer
Right.
employees, because sometimes when you offer it, now there's other hurdles you have to overcome. Like I know when I was living in Massachusetts, if you
Yeah.
offered it, now you had to start paying a percentage of it. So
Right.
you go down
Exactly.
the hole, and then you got to provide all these other things. So definitely keep that in mind when you're making these decisions.
Yeah, it's definitely very state by state. That's one other thing I would definitely point out, is that it really depends a lot on the state too, in terms of like options that are available, and like, just how it's all going to work out. So, I'll say, obviously we've had discussions before, that area of the country, the Northeast, typically tends to be a little bit more limited, a lot more regulated in terms of kind of what your options are, especially as an individual. But certain other areas of the country are a lot more lax, and you definitely have a lot more flexibility of options. So it does depend a lot on where you live, but that's
Mhm.
also partly why I always recommend that you talk to a professional about it, because this stuff does get complicated, and there are a lot of different factors to consider. And even just the state that you live in is actually a really big one. So,
Oh yeah, yeah. I think
yeah,
that shows the value of someone like yourself, Mitch, where you can go
sure.
through and be like, okay, here are the state rules and regulations, but also, all right, what are the prescriptions you're on? What are
Yeah,
your medical needs? So let's try and match a
yeah.
plan that's all in a better cost for you versus saying like, hey, I want the platinum plan, but like, hey man, you're never sick. Maybe you don't need that.
Yeah, yeah, no, no. And that's actually a really good point that you raised there too, is that is knowing how your plan covers and what it covers. So that's the other thing too, is sometimes people will transition from like a company plan to a new plan and expect it. Let's just say they're okay with the monthly premium, the deductible's fine. They're like, okay, but then they start using it maybe for something like an expensive medication, and they realize, oh, wait, it's not really covering this medication in the same way that I'm used to this being covered. Now I have all these out-of-pocket expenses I'm not used to having, because you weren't, or maybe even like a pre-existing condition type situation too, where if they sign up a private health insurance plan that has like a 12-month pre-existing limit, they may not understand that maybe an upcoming surgery that they have actually isn't going to be covered on this new plan they signed up for, and because they didn't ask enough questions, they didn't read the fine print, or they didn't have someone walking them through and telling them like, hey, you don't want to do this because it's this thing you got coming up is not going to be covered. So there's so much to consider. Absolutely.
Well, I think what people need to realize is these are contracts, legal
Yeah.
contracts, and there's a lot
Yeah.
of legal language that you're probably not going to read. Right?
Right.
I imagine most people don't want to sit and read their health insurance policy.
Nope. Nope.
So you really want to make sure you work with someone that understands it really well and can, talk about how this relates to your life versus you
Absolutely.
can't negotiate that stuff.
No, no, no. It's very black and white. Absolutely.
Yeah. Any parting pieces of advice, Mitch, for us?
Man, I would just say, do your homework. Obviously if you get laid off, that's a tough situation. You're kind of thrown into the fire at that point. But I mean, health insurance is not something to put off, is what I would say is, and that's another thing too, is sometimes people, even if they're just leaving a job to become self-employed, don't put that on the back burner. It's like, well, we'll figure that out later. I'm sure it'll be fine. We'll get something signed up later, because sometimes they wait till the last minute, or they wait till it's too late, and then they realize like, oh crap, I'm out of options here. Or like this isn't what I thought it was going to be. And it's all of a sudden everything kind of gets turned on its head, and you have all this added stress that you didn't expect. So, I mean, health insurance is a huge part of it. It's definitely one of the, I think, key pillars that you want to really make sure you do your homework on, and ideally do your homework on in advance. As much time as you have in advance before like a certain deadline, whether that's coverage ending or, you're leaving your job, what have you, get it done in advance. You don't want to wait on the last minute for that stuff, because sometimes you end up in a lot more complicated situation than you expected.
Exactly.
So
I mean, the premiums may change slightly from 1 month to the other. So if you had to wait 3 months out, but you at least
Yep.
have a general idea. This is the plan I want. This is the general range of premiums I'm going to look
Exactly.
at. It's
Exactly.
much better to be proactive than reactive with this stuff.
Absolutely.
So Mitch, all right, last question. How can people
Mhm.
get a hold of you?
Me? Well, you could definitely reach out to me personally. I mean, LinkedIn is actually kind of my primary kind of online presence right now. I'm still getting the web page set up. I had a little snafu with that earlier in the year, but you can look me up. I'm under Underwood, or the Health Advocate. You can find me on Google, LinkedIn, Facebook. I'm all over. Mitchell Underwood. Look me up on there. You can always reach out to me there. I'm pretty easy to get a hold of. Pretty responsive to my messages. So yeah,
Sounds
absolutely.
good. All right, thanks,
Mhm.
Mitch. Appreciate it.
Yeah, no problem, man. Thank you.